All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, what we're going to be doing is we're going to be looking at Cornerstone Strategic Value Fund. CLM is a ticker symbol. And why we're going to be looking at this fund is because over the past month or so, it has absolutely declined in value, dropping about 15 to 20% or so, and then rebounding back up about 10%. So what we're going to do is we're going to cover Cornerstone. What I do want to do for you guys is I have a special treat. This is brought to you by Stephen Fried 310, not 30, 310. Stephen Fried 310. Fidelity drips at the NAV on CLM and CRF. That is great news, and thank you, Steve, for pointing this out. That's why I want to give you the shout out in this video, is because he let me know that Fidelity, whether it be fidelity.com or fidelity.ca, the Canadian version, he says that they drip at the NAV, meaning they drip at the net asset value of the underlying fund, which is Cornerstone Strategic Value Fund. And so what I'm going to do in this video is we're going to go over the NAV. I'm going to show you Fidelity a little bit. I'm not going to really go over Fidelity too much, but they do have a really cool investment calculator that I do want to use. So that's what we're going to get into this video. And I'm going to show you some crazy returns that you could potentially get with Cornerstone if you play it right, as they do say. Now, without further ado, I want to say we're up to 3,264 subscribers, so please do subscribe if you haven't yet done so. The last video did absolutely dog doo-doo, but it's all good. 700 views, that's all right. You know what, in a day, how can you complain with 700 views? That is still not bad, but I'm sure we'll get this video way beyond that, because today we're talking about Cornerstone. Now, Cornerstone, for those of you that don't know, it's kind of like a fund itself, like an ETF. Even though it's not an ETF, it's a strategic value fund. It is actually characterized as a closed-end fund as well. I was going to say closed value fund. A closed-end fund, meaning that they don't introduce any new shares, and they just kind of play with the shares they have. One cool thing, if we're going to read about it, is the fund's objective is to seek long-term capital appreciation through investment in equity securities of U.S. and non-U.S. companies. Now, it's interesting because they say they look to seek long-term capital appreciation while they still do pay a 20% dividend. So that's something to keep out for. They do have a small market cap at $1.6 billion, but CLM is rated a 4-star fund, as you can see right to the right of the blue area right here. You can see the 4 stars there. But Cornerstone invests in a bunch of different companies, as their top 10 holdings are pretty big holdings. You got Apple, Microsoft, Alphabet, Amazon, Berkshire, Nvidia. So these are all pretty massive holdings that they hold, and they are a closed-end fund, as I said before, so they don't introduce any new shares. One thing that's very interesting about Cornerstone, and the reason why a lot of people buy it, is because of their net asset value. They drip at the NAV. So basically, you will be buying Cornerstone for the current share price, whether it be at $6.78 or today's, which is $7.26, and you can reinvest, drip your dividends at the NAV. And as Steve said it, you could do it through Fidelity Investments at fidelity.com up here, or fidelity.ca. But one thing that's really cool about that is you can kind of predict the NAV, and you can predict what this NAV is going to be by looking at the balance sheet of Cornerstone. Now, the net asset value for those that are not too sure, so the net asset value of an investment company is the company's total assets minus its total liabilities. So to put this in perspective, if CLM is a fund with $1.6 billion, and you can see here that their total assets to liabilities, we're going to call it basically about just under $1.6 billion, because as you can see, they barely have any liabilities, basically about 1.6. So their NAV theoretically should be slightly lower than their current share price. Now, as more people buy and more people invest in CLM, this price is going to increase, but the NAV is going to stay the same, and you're going to be able to drip at the NAV, meaning your dividends from this price will be put in at $6.20. Now, if Cornerstone was to appreciate like it did in the past and get all the way back up to these levels here of about $8 in the high $8 range, that means that you could be receiving even higher than really a 20% dividend. You might be looking at a potential 50% dividend, because you're also getting the capital appreciation returns of the immediate share buybacks at $6.20 while still receiving the 20-cent dividend. Now, looking at their recent dividend payments, we're going back, you can see that they're fairly consistent. They pay pretty much a similar dividend amount every year. One thing to note though is that their dividends aren't always the same. You can see they did appreciate going from 2021 to 2022 being a monthly paying company, but going into 2023 in January, they were cut by a pretty drastic amount, about 30% or so. So that is also something to keep in mind. Now, with this all being said, what I do want to do is just look at Cornerstone's kind of price history over the past 5 years. You can see it's pretty much, you can call it sideways, but it's more so downwards. But what I want to do is I want to take this 20% dividend, and we'll say if you were to bought back in 2019, I just want to see the share price here. If you were to buy back in 2019 at a rough share price of about $12, you would have maybe lost about almost 50% of your capital appreciation, but you would have been receiving a 20% dividend every single year. So that averages it honestly averages about 50% once again. So what we're going to do here, not over that time period, but that is about a 10% return over the time period, 50% in total. So what we're going to do is a $10,000 investment. Why don't we do a growth period of about 30 years? We're going to do it at 10% what it is. Additional contributions, we'll do a monthly $1,000 every single month. So as you can see, with $270,000 roughly invested, your compounds would have earned you about $350,000 and about a total, I guess, what's that word? Net income, or not net income, but total net worth of about $760,000. Now imagine we were to increase the time of growth rate with this company, bumping it to 60 years. You could see that the amount invested would only be about $400,000 or so, but it would turn into 15 million. And adjusting this rate of return, if we were to stick it at that 20% yield, which it's currently at, you could see the investment returns are absolutely ridiculous. 20% a year for 60 years. Obviously, where are you going to get that? That's pretty insane, but it would turn to $3.3 billion. That is the power of dividends right there. As you can see, I could even lower the time frame and you'll still see that even 20 years, 25 years, just even going from year to year with a 20% return is pretty ridiculous. And that is a current kind of return you're getting on your dividends just off of what you bought, not your NAV drip dividends. So that's something to keep in mind if you were looking to invest in CLM through Fidelity, let's say. I'm not obviously advising that you do that, but that's just kind of a platform that you could do. I hope you guys did enjoy this video, learned a little bit about CLM, what dripping at the NAV is, where you could do it, and anything like that. I hope you guys did enjoy this video. I actually don't own any CLM in my portfolio, just a little heads up, but that's all I wanted to say. So I hope you guys did enjoy this video. Please do subscribe if you haven't yet done so, and I will see you guys in the next one. Have a great day, guys.